Hello, welcome everybody. Welcome to day 4 of the Japanese Company Handbook Challenge for July. We've done 3 live stream days already. Just a recap of what we've found so far. We currently have, for the last day, in total, we've found 3 companies that look interesting. One is Buffalo 6676. This is essentially just a very cheap company. I think it was trading for almost close to like enterprise value potentially for this company, and management was aggressively buying back shares, issuing dividends. So the business model though is kind of not that great in that it sells electronics that are pretty close to what you can find in China. So in that perspective, it's not that great. Some viewers who are based in Japan says the quality should be better than China, but I'm skeptical in the actual difference. But yeah, the company is cheap and they're aggressively buying back shares. So this is mainly a cheap / buyback play. And then there's Hammock. This company had like 3 different departments where it did 3 different types of like software types of sales. And its margins were expanding, its revenues were growing, and it was just trading cheaply. This one isn't close to 0 enterprise value. This one is trades at, if I remember correctly, let me just quickly take a look, 173A. So it trades at these multiples, right? 4 or 5 times EBIT, 11 times PE. But revenues are growing, they're growing their customer base, they're growing their software sales, and their margins are expanding. So that's the nice thing about that one. And then there's Hard Off. Hard Off was given by another viewer. It was a viewer request 2674. This is more of a GARP investment. They're not too undervalued, but they're expanding their store count in Japan. So Hard Off, essentially they buy back used items from individuals at a really discounted price, and then they sell the used products at their stores. So they have like Hard Off, they have like Book Off, they have like different offs for different categories of things. Hobby Off, so they have some stores that are more focused on like automotive vehicles, some that are focused on books, some that are so you have a little bit for everybody. But the margins of Hard Off is better than another company that also does similar things, which is Geo Holdings. Geo Holdings is more of a one-stop shop, meaning they'll take stuff from everybody and put it in their stores, and their stores aren't really categorized. So that's kind of how Hard Off differentiates themselves. So the Hard Off believes that they can grow their store count domestically and also internationally. That's what they're trying to do. So there's some growth component, there's some defensive component. I don't know if you guys noticed during the April downturn, when there's a lot of stocks going down in price, Hard Off Geo Holdings were quite defensive. They didn't really drop that much. So in nature, they're a little more defensive. Yeah, and then last stream I didn't really find that much last stream. It was kind of uneventful. I didn't even find a single A stock last stream, and that was Nippon Kanryo. Nippon Kanryo, did I create a list for that one? No, I did not. What I remember for this one was that this company had like a negative enterprise value, but then because they have a really low dividends, they didn't really state much buybacks. So essentially, they were cheap, but then they're cheap for a reason, essentially. So I wasn't really convinced that the management was doing anything to unlock that value. So the thing about Nippon Kanryo, I believe, is that they do road repairs. So they also put like shielding on roads or fences on roads to prevent if there's like a landslide, or if there's rocks tumbling down the mountain, to protect cars and people, I guess. So if there's like a natural disaster, for example, right, and there's more road repairs, then Nippon Kanryo would actually benefit from this. So if there's ever a trade where you benefit from natural disasters, and this would be one of them, but not really in my wheelhouse. So yeah, that's a recap. Last time we started at 125. So I'm actually not sure where. Let's see. Let's open up our Japanese company handbook and so we left off. So Nippon Kanryo was the last company. Did we go further than that? 177A. Let me just double check some stocks. 177A. So we did get to 177A. We got past that. 178. 1788 is the biggest number I see here. 1788. So we'd have gone to Santo then. ETS holding. So let's put 1789. Yeah, that's the biggest number. So okay. So I guess we'll start off on 132. So today we'll just put that there. Oh, 25 here, 132 here. Okay. That's where we're going to start for today. And then after around 3 or 4 companies that we get through, we'll do a special request, and then we'll just cycle like that. If the initial few companies I get through very quickly, like within like 10 minutes, I go through 3, like, oh, this is too hard, this is too hard, this is too hard, then I'll continue going until around 30 to 40 minutes. Then I'll take a special request. Yeah, that way, that's the structure for today. Okay, so I need to be cognizant of this because I keep forgetting to update the ticker. So we haven't started yet, so we're starting now. So the company we're looking at right now is 1789 ETS Holdings. So viewers did mention as a potential improvement is I need, even though I have this here, I'm not utilizing it very well. So I need to start doing this, ETS Holdings, so that people can follow along with me. So that is very valid. So I need to create a structure. I think the structure that I'm thinking of doing nowadays is probably go through the company. If it's something of value, I will recap, do a summary of that stock and why I think it's investable, if it is investable, or why it's not investable, sure. And then at the end of it, I will, and then when I move on to the next ticker, then I'll change the ticker on this thing. So it has to be, so it'll be review, summary, change ticker. So I'm gonna put that in a sticky note right now, just to remind myself and just make it a habit. That way, whenever a new audience member joins us, they know where I'm like kind of starting, right? And yeah. Oh, also one thing another viewer told me to do is to add timestamps. So whenever I have a summary, if something is worthwhile as a summary, that's probably worthwhile as a timestamp, right? So in the post edit, when I actually upload this, I'll have timestamps in. So if you guys want to return to my live streams to see what is my summary for that stock, then you guys can kind of just like click into each segment and kind of speed run my live streams in the future. And I think that would help because I do see that a lot of people actually review the live streams, but it makes your lives a lot easier that way when it has the timestamp. So I'm gonna do that. So it would be review, summary, timestamp, and then change ticker. Okay, so it looks something like that. And I'll probably timestamp it over here. I'll add a section here, call it timestamp. I don't think I'll get through that many, to be honest, right? So if there's something of value, there's probably like, going to be like 5-6 times of value, where I can provide a summary. So if we even get that in a single live stream, that's already like pretty good. So, okay. Okay, the company right now is 1789 ETS Holdings. So just keep in mind, guys, if you guys haven't joined me in other live streams, we are currently in the construction and energy section of the Japanese company handbook, which is, in my opinion, not really my wheelhouse. Some construction I can understand. Like for example, road construction, I can kind of understand. There's probably a lot of nuance I actually don't understand. But essentially, a lot of these companies aren't exactly undervalued, right? So yeah, so essentially, if I find that something is just too complex, there's not enough financials, or not undervalued enough, then I'll just skip pretty quickly. So that's where we are at. So 1789 ETS Holdings. So they mainly engage in electrical engineering works such as indoor electrical works and power transmission line works. Okay, started business in 1922. In the electrical engineering works, the majority of orders come from Tohoku Electric Power. Bought back the business rights for works related to the Tokyo Electric Power for the first time in 12 years in May 2017. Expanded dealings into Kansai Electric Power, Chubu Electric Power, and Chugoku Electric Power. Interesting. Has been focusing on renewable energy related areas, but later shifted to works for extra high voltage substations. Okay. And that's enough of an overview for now. Let's take a look at. Oh, operating income is pretty damn low for sales. Okay, let's put this into Koyfin 179. Oh, so this company looks like they got delisted. Huh, 179. So if it doesn't show up on Koyfin, typically it's because it's delisted. So there we go. I'm gonna put that in the delisted pile. So move on, next one. 1793. Maybe I should just do this so I can save you guys a few seconds. Okay, they are on there. Okay, so 1793. Okay, need to change ticker. 1793. Moto Gumi. Okay. A medium-sized construction company based in Okayama Prefecture and operating nationwide. Medium-sized construction company. I think none of the construction companies really offer much merit, if I'm going to be honest. So what I can do is quickly take a look. Okay, so around 700 in 5 years went up to like 1200, so it's gone up a little bit, but doesn't move much. It's an uptrend though. Ooh, okay. Too unprofitable, probably. We don't even have the financial. This is fiscal 2013. Do you have income statement? No, we don't. Well then, that's okay, so Koyfin does not have the does not have the stuff for this company. Let's see here. Wow, what are these? It's so choppy. Financial presentation material 2020 to 2025. Did they literally have a massive ass document that goes through? Okay, let's see here. Okay, revenues. Have gone up until 2022 and then dropped. Oh, these operating incomes are better than. Oh no, it's down here. Okay, so this is it's 2.5%. So this is operating profit, and this is ordinary profit. Yes, but this is very low. 2.5%. This is like not even a percent. Okay, I'm gonna say this is too low profitability. Probably not worth looking at. Probably not worth looking at. Is there any data they have an enterprise value? Probably not, because okay, so 32 billion market cap. Let's quickly take a look. Do they have a balance sheet here? Do they have a balance sheet? Okay, so cash 10 billion. So 22 so far. No, Fernando, there's no S stock so far. My bar is pretty high. I don't know if my bar is too high. There just hasn't been any. I think I'm just stuck in a section right now where there's construction energy stocks. So it's like nothing looks that appealing to me yet. Yeah, that's what I'll say. I'm gonna quickly download this and then we'll come back. Quickly download this. Let's see. Let's see if I can get this done in a few seconds. Downloads. Crap, I don't think I downloaded it in the right place. One moment. Okay, download. maybe skip the entire bad sector. But the thing is, there are some companies hidden within those ticker symbols. Like, for example, not everything in there is construction, but it's mainly construction, which is annoying. I might have to do that. You guys might be right. I might have to just like quickly skip the constructions. Fuck this. Construction. Fuck this. Like the correlation is like way too high. But then okay. Okay, we got it. Okay, so cash. Well, we'll do enterprise value calculations in my head. Okay, so far this is minus 10, so 32, so 22. We're at 22 currently. Investment securities 9.8. Oh, okay. Another 10, let's assume. So 12. 12. And then short-term borrowings of 3, so we're at 15. 15. Oh, and then net assets is 65 billion, and then they have 33 billion. So price to book is like roughly half times. Accounts receivable from complete construction is quite large. It's like massive. Fixed assets, 22 billion. Wow, so that's actually pretty cheap. So 15 EBIT. Sorry, enterprise value. What's their? What is their operating income? Operating income is, what is this shit right here? Let's take a look at a Japanese version. Why is it left, right? Oh, like positive and negatives? Okay. So 15 on 1.8, so this is 1.8, so let's just assume it's 2, it's like 7.5, so like probably 8 to 9 times EV/EBIT. Not that cheap. Okay, skip. Low profitability is the reasoning here. 1793. I think you guys are right. I think even I'm bored of construction companies. So if this is anything construction, and unless it's like really profitable, like it's some type of material, something with IP, like let's say it's some type of waterproofing coating, right? That is like anti-water, fireproof, yada yada yada. Some outstanding technology where the margins are really high, and then they're growing margins, like growing sales or something. If it's something like that, then it'll be interesting. If not, then yeah. So Masuru, the industry leader in sealing works. I literally said waterproof. What are the chances? Exterior waterproof works for condos. Changed the corporate name to the present one in 1989. The 3 main lines are sealing, membrane proofing, and renovation. Okay. Let's take a look at these margins. These margins are like 6%, under 6%, under 2%, under 3%. This one is better, around 6. Okay, 1795 also doesn't look very interesting. 4,000. Yep, low margin, multiples. What's LTM? 5 times, 3.3 times. Oh, very small company. Very small company. How's their income going? Income hasn't moved. Okay, good reason to not look any further. What's their dividend yield? That might change things a little bit potentially. Nah. Okay. This is low profitability. So this is 1795. Good. Quick pass. I like quick passes. Okay, next. Moria. Mid-sized general contractor. Okay, we're just passing that. We're just gonna pass. The reasoning. Construction. There. That's gonna be a reason now. 179. Yeah. Okay, Daiichi Kinsetsu. Medium size. Okay, also 1799. We're just gonna skip all these. Taisei. 5 major general contractors. Okay. Oh, okay, this company looks large. Massive. But who overtook construction works from the national government, but now is the only major general contractor unrelated to the founding family. Handles a wide variety of works encompassing all from large-scale submarine construction, such as redevelopment projects and detached homes. Take a look, because it seems like they have some type of scale, just for the sake of looking. Damn. Wow, okay, so 5,000, it went up a lot. That's impressive for a construction company. Ew, that's disgusting. How did the stock price go up that much? Did it have 3 quarters where it just did really well? Your profitability increasing. Yeah, profitability increasing. Revenues? 2.1 billion. 1.7, 1.6, 1.5, 1.5. It's not 2.1. Ew. What is this? Nah, okay. Okay, we can skip this. We can skip this. Not at these multiples. No, not at these multiples. Okay, I don't even need to go and try to understand what this company is about. Next. Obayashi. Okay, we're just gonna go through this like ham. I'm gonna put this to the side and just skip all construction companies. We're just gonna do that. 1802. Shimizu. General contractor. Skip. Tobishima. 1085. Watanabe Sato. Another medium-sized company. Okay. General contractor. 1808. I should have taken a look at some of these profitabilities. But this is okay. This is okay. This is crap. This is pretty bad. Okay, yeah. This is fine. This was actually surprisingly kind of high for. Condo construction. Next. Another medium scale. I'm just gonna, anytime it says medium scale, I'm just moving on because it's like, yeah, like they're probably gonna continue being medium scaled, right? Wow, established in 1705. All presidents have been from the Zeni Taka family, whose member has served as a master architect specializing in temples and shrines in the Edo area. Wow. But what are the margins though? Crap, even more crap, pretty crap. I'm sorry. Okay, 1811. Kajima, another major general contractor. Oh, these are good margins. These are decent. Sorry, actually no, they're not. They're all right. Okay. We're gonna speed run through these. We're gonna speed run through this. Top ranked soil improvement work company. Okay, this is something different. We'll give it a shot, guys. This 5%. Okay, well, we'll take a look at this one. Just briefly have a look. Is this what I saw? Fudo Tetra. Tetra. Okay. Let's take a look. 1,500 plus 700. Okay, plus 50% roughly recently. Oh, low margin, no need. Me don't like this low margin. Oh, Dicey. Dicey. This is something that Michael Burry himself has invested in. I don't know how he found this company. You know, in this out of the sea of crap companies, he was able to find Dicey. So I beat it in Dicey twice because Michael Burry was in it, like maybe a couple of years ago. And each time it dropped to I think around 1,000. I got in, and then I sold it for like maybe 1,500. I think a while back ago. And now it's up even more. But like originally, I think yeah, it was around here, and then it went up to here, and I sold and took profit. So maybe I just made money once. I think I made money once, maybe. Definitely made money on it though. Yeah. It was just like I think a negative enterprise value company before. So yeah, low margins, and then what was it? Negative EV. Negative EV 1 point. Now it has positive EV. Now it's 23 billion. But then cash and debt are even, so it shows still 23. Let's see, what are the multiples? 6 times, 10 times. Let's take a look at annual. Yeah, so I think. Yeah, when I looked at it, it was like really low enterprise value, like really low, really low. Now it's gone to something kind of normal. So nah, this is not as attractive as before. Yeah, before it was really attractive, and now it's like more normal now. It's more in line. So I would skip this. Next, Tekken. Gonna do some you know, fighting. I know that from a fighting game. Let's see, 3%, a little over 3%, 2%. Oh my god, trash. Okay, next, 1815. Anyone play Tekken? Fun story. When I was I'm not very good at Tekken at all. Like I'm better at Street Fighter than Tekken. And my character in Street Fighter 4 is where when I started. I use Akuma, but then I like watching people play Street Fighter. I'm not very good at it myself. But yeah, Tekken. So I was in this arcade in Guangzhou, and then like I picked this this girl character. Forgot what her name is, and then she has like this breakdancing spin kick. Right, and then I just kept spamming the breakdancing spin kick against this dude. He had no counter to it, and I just killed him. He got so mad. The guy, because you're like on opposite sides of the arcade, right? This guy literally walks over and looks at me. It's like, dude, what do you want me to do? So that happened. Yeah, okay. Nishimatsu Construction, second tier general contractor. And we're just gonna skip these. Okay, 1820. Sumitomo Mitsui. Okay, so Fernando said played some Dragunov, but left it. Takes too much time to get good. Plus luck of the opponents having an actual good connection. Yeah, I think that's definitely a major factor in online play is that you need a good internet connection. And both sides need internet connection, or there's some timing lag. And then if your internet cuts off, that's also bad too. Yeah, I was trying to master Ryu first, right? Because Daigo Mihara, right? And then so one of them is like you have to do a low punch Shoryuken, cancel that FADC because once you do the first uppercut animation, your opponent's character jumps in the air. You have the FADC dash forward, and then you have to do quick enough. You have to do like the down corner right, and then into the ultra, right? I cannot link because the timing is so short. The frame rate is so fast. The number of frames you have to execute that is so low. It's like it's very impressive. Like these guys are literally, it's like they're athletes in terms of like finger motions, right? So you really have to like practice. It's just like it's impressive. I'm sure if I spend enough time, I could eventually get it. But it just at my stage in my life, I didn't have enough time to get good at Street Fighter. But yeah. It's something I definitely admire in some people. Okay, 1821. Okay, once I see a negative profit, I'm just moving on. So profit, low profitability, no profitability, losing money, 1821, moving on. Daiho, middle class, middle class. Okay, another middle class. So we're also moving off that one. 1822. Dude, how many construction companies are there? 1826. We're just gonna still speed run. Jeez. So this is gonna save us a lot of time. Just give me plant engineering, work contractor. Jesus. 1828. Okay, we're gonna skip that too. Hokai electrical construction. Very low probability. Also gonna skip that. Middle class general contractor. Again. Damn, how many of these companies are there? Holy crap. We're just like skipping through these. I'm curious what Buffett did when he went through like this section. It's just like, nah, we're just not feeling it, right? Tsuchiya Holdings. I guess for Buffett, it's probably even faster. It'd be too small. For him, it's like too small. We don't have that problem though. Tsuchiya Holdings. Okay. Because Tsuchiyas are like these older houses, right? But profitability really crap. It's like sub 1%. What the hell? Okay, moving on. That's not working. 1820. Sanyu. Oh, jeez. Okay, moving on. You know what? I'm just gonna scroll through this and see if I can see anything interesting. Concrete, margins, crap. Next. We're just. I'm not even gonna bother typing. I'm just gonna keep scrolling until I find something of interest. Provides educational digital materials centering on video class contents to cram schools. Main service include Manabi Aid Master. Providing video classes, pursuing learning results, and supporting efficiency improvement in cram school. 20%, 20 something percent. Okay, maybe there's something here. 1848. Maybe there's something here. Price has consistently declined, had a bump up and then decline. Oh, let's see. We don't have any LTM stuff. I typically don't like wasting time on companies with limited histories. 20% margin looks nice though. It does look nice. So they have Manabi Aid Master for enterprises, creating reference books and paper, distributing them to education-related operators. Targets needs for high time performance. Don't know what that means. Known for its micro lecture courses where lecture videos are divided into short time segments for users to view their very desired points. Plans to pay no dividend for the time being. I think I'm just gonna. Do I want to look at something like this? ROE, alright, it's pretty high. Growth and revenues aren't very high though. Almost doubled and then increased like 25%. Okay, let's take a quick look. It's worth taking a quick look. Do they have an investor presentation place? Yes, they do. The best video lectures anytime, anywhere. Video lessons without phases. Without faces. I'm a little hot. I'm gonna take off my sweater. Give me a second, guys. No one ever thought of online classes. I'm pretty sure a bunch of people thought of online classes. I'm pretty sure they are not, but let's say they have some, Ministry of Education contract where they can expand through all the prefectures, something like that, and that could be interesting. But we don't know. We'll see. Nice. Nice financial summary. Nice. I like the aesthetic. Okay, I'm gonna quickly download this stuff. Okay, this is worth me changing the ticker for now. So this is 184A. Company Manabi 8. Looks like a band-aid. 184A Manabi 8. Good. Okay, so this is 184A IP download. Next, financial statement. 184A FS download. And then this time, I have 2 online doc translators loaded. One thing I noticed though is that I can't run them both at the same time. I can upload it one after the other and then wait for one to finish translating before doing the other, or else it recognizes the IP and I think it just overlaps. Do some bullshit verification for some reason. Where's my other online doc translator? There we go, there we go. Okay, we have the IP loaded. Okay, let's go through this while we wait for the financial statement. Financial statement is almost done. Just say be a player. I mean, that's not my default, but I'll try. Let's see here. $6.28. Okay. Well, wasn't this their actual last result already? Oh, did this sales drop? Learning aid master for school, learning aid master, learning aid for enterprises. Interesting. Also, we will strengthen our new order activities during the fiscal year 2025. Only some of these orders were recorded as sales For the remaining projects, due to contractual delivery and inspection periods, sales are expected to be recorded in the fiscal year ending April 2026. Sales from contractual enterprise services have decreased compared to previous years, so the bias has eased, but the tendency to be biased towards the second half. Okay, that explains why the share price has dropped. Cost of sales, labor costs increase, advertising, they're spending more. Others, what are others? Expenses related to relocation to head office increased by approximately 90 million yen for rent. Okay, the financial statement here too. Okay. Ooh, that's ugly. Yeah, that's why they dropped. So, okay, it's 289 in sales. Just drop by. Okay, this we can just. Okay, unless that's pretty bad. Ooh, yikes! 30 million. I mean, what's the enterprise value right now? No, this is easy pass. This becomes easy pass quite quickly. 1.8. Yeah. 1.8 billion. 30 million in cash. Investment securities, none. They have debt, a little bit. Okay, moving on. I mean, I could spend a few seconds on the IP real quick. See what they think the growth opportunities are, because I'm not seeing it. We can also look at the accounts receivable, actually, real quick, because they said they have a lot of stuff going down the pipeline, right? So, accounts receivable is, well, previously it's 240. So, what are they talking about here? This is only 49. So, even if they lack sales, it's not even that much. Like, if this is like 400, then you can say something about that, but there's no. So, that's kind of crap. Synergy effect. So they think it's going to return, but then it's below 600 for the next year. So that's, I don't know about that. No. Okay, move on. Yeah, this is a move on. Too complex to understand. Well, basically not profitable right now, so losing money. We're gonna put this 184A in the losing money section. And then we'll move on. Okay, next. Construction. Contractor. Engineering works, construction. Oh, sorry. Out of curiosity, Fernando says, out of curiosity, how does one learn to screen stocks these days? Intelligent investor. I don't think the yeah, to answer your question, Fernando, intelligent investor is very theory based. It just gives you a understanding of the theory, value investing theory. Right, and the main thing you get from that one is the margin of safety. That's the main concept. Another core concept there is the differentiation between speculation and investing. Right, it actually gives you an idea of what that is. I think the screen stocks, like Intelligent Investor, Benjamin Graham does go through what he thinks is considered cheap, but then I think if you take those exact multiples and apply them to modern days, they're a little bit way too rigorous. Maybe they're not so rigorous if you apply them to Japanese stocks. So to answer your question, I think it's to learn to screen the stocks. I think you learn to screen stocks from just looking at stocks, reading more stock pitches, just understanding what to look for. Figuring out what your circle of competence is, right? So what industries you enjoy looking at, what do those typically trade for? So that, if you screen for, like, let's say you get good at consumer companies, right? And then you know what a fashion brand would typically trade for for example, right? So then when you're looking at certain fashion companies, you'll have a good sanity check or of what things should be valued at. If you're asking, let's see, yeah, green black lectures are definitely really good for learning in general, right? So you get an idea of how to approach valuation from a practitioner standpoint. So that's the greatest value from green black lecture. But to screen stocks, I think it's really just sure getting to a level of experience where you know kind of what to look for. I'd say. Sorry, it's not an exact answer. Yeah. I don't think there's an exact video. Maybe I can make one. Maybe I can make a video. I mean, literally watching me doing this live stream is kind of like a tutorial of how to like. I mean, actually, no, I have not screen. Actually, wait, hold on. I believe I have a few videos where I screen stocks. Hold on. So I remember in my Research With Me series, in one of them, I forgot exactly. Oh, using a stock screener. Literally, I wrote it right here. Using a stock screener. So I remember in one of these live streams, I was tweaking and playing around with the stock screener, and you can see me using it. Right? I mean, some of it is very easy. Like, oh, what are companies that are trading below like less than 10 times EV/EBIT, have no debt, have net cash, issue a dividend, let's say, at some percentage, and then you will see essentially. So here's a quick. Let me go through some of these. Okay, so Japanese value stocks. Okay, less than 10 times EV/EBITDA, less than EV/EBITDA 10 times, dividend yield greater than 0%, P of less than 7 times. There are 49 matches. So essentially, you basically narrow down the matches until you get to an amount that you can actually look through, right? Yeah, so that's an example. So I can look through 49, but if it's 248, then it's too broad still. So just add little layers and layers until it's manageable. Of course, after you go through this list, you can, not all companies are going to fit this criteria, right? Maybe some companies are very good growth companies, right? So then you might move on from 7 to 10, and then 10 to 12, right? So then you can move to each segment, correct? And maybe you're okay with no dividend, which is fine too, right? So yeah, hopefully that answers that question. Contractor, no. Astroscale Holdings, debris removal solutions. Ooh, very unprofitable. Move on. Yahagi. Constructor, move on. PS Construction, moving on. Yeah. So for anyone new here, we're just trying to get through the construction period as fast as possible because there's nothing here that is like really worth looking at yet. So the main line is the provision to landowners of proposal for lease management by constructing companies and others. That strengthens comprehensive services ranging from the construction on consignment of housing for lease, brokerage, and management. Okay. I like this type of business, so I'm going to quickly see if it's trading cheaply enough. Ooh, expensive. Expensive stock. But if it's trading close to 0, enterprise, it's not. It is not. Sometimes PE isn't trading that cheaply. Yeah, no. Let's see here. Div yield 4.44%. Not a glaring win. So let's move on. Construction, moving on. Too low, too limited of a history. Oh, this looks interesting. The core operating subsidiary SAMT was established in 1989, develops condos for lease. while dealing with other revenue-generating properties such as office buildings and hotels. Also rehabilitates existing properties such as condos for lease and other buildings. Sells properties to listed REITs in the group as well as overseas institutional investors outside the group. This could be overlooked, so I'm just going to quickly take a look at the company. Not on here. Not on here. Okay, great. Toa Road. Toa Road. That is quite a name. Okay. Yeah, road paver. Okay. Sure. Let's quickly look at this. 182. Toa Road. Wow. Okay. Lower margin business. 3%, 4%, 4%, less than 3%. 71 on 7.7. Let's call it 863. Doesn't look very cheap. No, moving on. Nippon Road, another road company. 6%, 5%. Doesn't look very good. But we'll take a look. Also went up. A lot of road companies going up. So here's the thing, right? I looked at enough road companies where, like, if this is what they're valued at, why was the road company I looked at before valued the way it was valued? Right? Could be like a mean reversion play there, right there. So this is 1027. 27 on this. 30, 80. So 83. That's completely different now. Not as cheap now. Ooh, no. So dividend line. Nope. Nope. Next. Oh, there's Toa Road and now there's Toa. Are they connected? Are they? Toa Bridge. Toa House. Marine Constructor. Okay, these margins aren't that great. Let's see. 1885. Wow, all these road companies are going up. What is going on? 4.3. So mine is 130. Increase a lot. And then they also have more debt now. So this is like 40, 180. 180 on, okay, 9 times. 40 here, 10 times, not that cheap anymore. What is going on though? Okay, so based off all this information on the roads, this is why like I kept 1771 for something exactly like this. Right, you have like these road companies, right? So this one does in traffic safety facilities, making road signs, protective fences, other traffic safety, ground stabilizing material like wind embankment, wall block. So yes, but then profitability real quick. Okay, kind of crap. Enterprise value. Yes, so this is okay, 5.3. Yeah, so it's trading at basically no enterprise value. Right. What's the PE? Let's think here. So let's call it 5. 5 on 6, so like less than 9 times. 5.4 would be, like 6 times, and if you normalize it, a little under that. How's the dividend? Low. Okay, so this would be something like a mean reversion trade, right? Like if you say like, hey, road paving is gonna do well for some reason. I don't know why. Road paving is rocketed like that. Then why is like a supplementary business like traffic signs, safety signs? Because when you pave a new road, you're gonna have to like put in these protective fences, yada 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 yada, right? Like, so if there's actually some growth thing that I'm missing here, which I need to figure out later on, then this should be a trade, right? This should be a trade, right? Because they're trading at basically close to nothing, with 0 enterprise value, right? And the revenues are growing a little bit. Kind of stagnant over here, but so that's an idea. But I'm really not understanding where the paving thing comes from. So I might have to look at. So this is an idea. This idea is to look at all those. I'm gonna jot down what these paving companies are. What are these road paving companies? Okay, we're gonna list them out quickly for my. I'm gonna put this aside, and then we'll quickly do that. So this is a. Port terminals. Nippon Road. Okay, so 184. What is another Toa Road? 1882. Condos, no. Condos. East Management, no. No. Anyone remember what other road company I looked at? I think there was one more. Maybe. Alright, Google Business Contractor, Condo, no. No. Pre-stressed concrete. Okay, that's fine. I have 2 comps, so that's okay. I'll look into the other comps afterwards, which is fine. Yeah, something worth looking into, potentially. JDC, established in 1951 to promote and disseminate civil engineering work such as machinery. The backup of then Prime Minister Shigeru Yoshida. Was formerly unprofitable. Civil engineering, skip that. Skip this. Toyo construction. Skip that. Any medium-sized contractor, we're just gonna skip. Penta Ocean Construction, largest marine civil engineering, skip. Marine civil engineering. Marine civil. That's interesting. Skip. Another road paver. 1898. Let's take a look at this company. So there might be like a road paving trade right now that I'm not aware of. Oh, this was interesting. It went up and then went down. Expressways, bridges, roads. Okay. Company 52 billion yen. Okay. Profitability. It's one of the largest. How does one of the largest do? Okay, the margins are definitely better than most, but it's still kind of crap. Depressed value. 52 MCAP. This is around 83, 3.8. Yeah, still like 48 billion. Still like 48. Not that cheap. But worth putting down as a comp though. So Fukuda, the largest general contract in Niigata Prefecture. No. Skip again. D&M company. Okay, finally something interesting. Potentially interesting. The management support business for medical institutions and others is the core. Provides medical and nursing care facility operators with various services such as factoring for medical consultation and nursing care fee receivables, leasing of medical equipment, consulting for improving management. Also provides contracted services such as staffing and outsourcing. What are the margins though? Okay. Limited history, I might have to skip though, because limited history. Okay, trading pretty flat. Pretty good margins. Debt, so 2 on 9. $2 billion PE on how are they going to grow their revenue though? Revenue hasn't really grown. I'll skip. Don't want to speculate. Not much history here. Taisei Oncho, middle class pipe engineering firm, providing air conditioning and water supply drainage services. Sorry, refrigeration equipment engineering. Margins are, let's see, 5%, 3%, pretty low as well. 1904. 1904. Okay, market gap is around the same. Again? Middle class pipe engineering. Pipe engineering. What is their dividend? 4.4. Engaged in the design and construction of air conditioning, water supply, drainage, sanitary, and electrical equipment systems in Japan. Also offers maintenance and renovations. Operates 8 branches, 24 sales office, 17 maintenance stations. This could be interesting, actually. This could be interesting. No, at one point traded very low. Very, very low. Oh, annual. Revenues have increased a little bit, 20%. Well, dropped and then resurfaced. Dropped and resurfaced. So it's not growing. It's not growing. So they took on some debt recently, right? Took out a little bit of debt. So 4 on 12 is 8. And this would be 16. 16. 3.5. A little over 4. So like 5. Eight times PE. Not bad. Okay. So when I hear, this is what I hear. So I hear what I want to see is reoccurring business or revenues, right? So installing is one thing, right? That's fine. But then how's this after sales component? If the after sales component is growing, then this could be worth a lot more. If it does a lot of one-time work, then I'm not interested. Because that's usually where the discrepancy in valuation comes from. Because if they, every time they install HVAC, right, and then they sign a contract, like, oh, every year you come back to maintain our HVAC system. Awesome. Recurring revenues, right? And in Japan, you see a lot of that is scenarios. Oh, there's an English. They have an English site. Oh my god. English. Do you have what I am looking for? What was this? What was this? They just volunteered an IP in their investor relations. You just click investor relations, immediately an IP pops up, right? That's impressive. Okay, they're forcing it down the hatch right now. Fiscal year 2024. There's no date on this, so that's like kind of awesome. It's kind of, is there a date on the bottom of this, bro? Okay, well what I can do is open the Japanese side and then compare what this presentation looks like in relation to the relation to, let's take a look at business real quick. So ikubiru is a term for our philosophy of considering buildings as living things from which we develop, extend, and maximize their lifetime value. Translation: we want to extrapolate as much recurring revenue as possible from you. Fair. Planning, design, construction, upkeep, and maintenance. This is the core thing that I'm interested in the most. It's not the construction. It's always the recurring part. Okay, let's take a look at the Japanese version, which is fine. Can this be an A tier? This could have potential to be an A tier. $14 pages. 14 pages. 37 pages. Okay, that's okay. That's okay. I can download this. We'll just look at that and screw the and then screw the other English side. That's weird. Dude, give me a financial summary, please. Financial summary. Okay. Okay, we have two things to download now. Okay, we'll do that. So this is 1904. So this is interesting now. We can change the ticker. I remembered to change the ticker, guys. I am doing good. I'm on a roll. Taisei Oncho. That is the company, right? Taisei Oncho. Good. This is the financial statement. 1904 FS. 1904 IP. Give me a quick second to convert everything. We will do the IP first and then the financial statement, because I'm hoping that they have investment securities as well. If they do have that, then that's awesome. That would be awesome. Okay. Finally found something that's worth looking into. And then after this one, we'll do a special request. I noticed it's been an hour already. The financial statement, I'll just put it here. And we're just waiting for the IP. And the IP is almost done. What the heck? Okay. right, perfect. Okay, so first thing, is there a one second. Oh, there we go. Do we have investment security here? Oh, they had some securities. Oh, they do. 3.8. 3.8 on what was the enterprise value previously? 3.8 on. Oh, that's a good amount. So 8, so 16, so 3.8. Let's say let's call that 4. That's 12. That's really cheap. Okay. We have okay. So what we're looking for here is, in the ideal setup, they have growing recurring revenues. That is what we're looking for here, guys. That would make this investable for us and exciting. Okay, operating margin has been maintained. It's 5%. Low under 5%. Low margin business, but it's okay. Oh, they do products to Japan and overseas. Wow. Interesting. Why overseas though? Construction work for air conditioning, water supply and drainage sanitation. Do they have some type of like technology that people local, like, I don't see why, like, do they have some type of relationships set up, like they're the main installer for a certain brand? I'm not seeing why they need to expand overseas, but then I guess it's good that they're expanding overseas, but that's interesting to me. Okay, so in the Japan segment, profits increased due to improved order profit margins and strong performance at Wood Tech Company. So I don't know what Wood Tech is, but we'll look into that. Profit in the U.S. segment decreased due to backlash from the same period last year. Although the market environment in China segment worsened, profits increased slightly due to cost reductions. So they're in China. Revenues have gone flat, up and then flat, up a little bit in Japan. Margins are crap, 4%. And then this one is also 4%. And this is also 4-5%. Okay, the margins are just 4-5% across the board. So significant growth due to progress in redevelopment projects in major metropolitan areas. In terms of breakdown, the proportion of new construction increased due to the completion of large new construction projects. More in new construction, which is good, coming down the pipeline, so that's good. New construction renovation work, and then completed construction amount. Okay. Business is performing well thanks to orders for large properties such as commercial facilities and medical facilities. New construction work contributed greatly. Due to delays in the progress of large-scale new construction projects, the amount of construction work carried over to the next period continues to increase. So the question is if they have to do overtime, like if these projects are drawn out, is that good for them? It probably is good for them, right? Because it's not, these are just contracts, right? So there's overtime, there's extensions, it's just like the same project but extended out. But I don't know if that has any repercussions on that if they booked up another project down the road, whether that would affect or delay the start of that next project, potentially. Revenues are expected to decrease due to decline in the U.S. segment. Okay, but I want to know the breakdown of their revenues based off of like. So they want 5% or more of operating profit margin, ROE of 8% or more. So next year is, they aren't very bullish next year. Progress on measures, deepening development of core businesses. They have construction using the silent system. By using the silent system, weekend and night work can be switched to daytime work. It becomes possible. Cost reduction, productivity improvement. Interesting. Establishment of the engineering management department. Reduction of work burden on site, improving working conditions and external resources. Strengthening the offshore engineering sector in Vietnam. So they have some business in Vietnam. So cash flow generated by deepening our core business will be used for growth investments, including digital transformation investments centered on digitization of business process, as well as investments aimed at expanding our business both domestically and overseas. So there is some growth component, but I'm not yet persuaded on what that is. Like they are doing construction, which is labor intensive, which is, I don't know, yeah. Liz on a cyber platform linked to the new ERP with various business applications to centralize data management, enables quick decision making. Taisei on controls new data linking system. What does that mean? Construction personnel, estimate management system, commercial property, calculation of expenses, payroll, material procurement. Okay. Production process reform centered on BIM. Integrate digital data at each stage of building from design to construction and operation. 3D modeling. Okay, so I'm gonna time myself for 15 minutes. What we need to establish in these 15 minutes is, are they growing revenues? Can they really expand overseas? And then do they have recurring businesses? That's what I'm looking for here. Dividend trends. Dividend on equity of 3% to 3.8%, so they increased it. They aim to maintain total return and expand shareholder base. Okay, increasing dividends, good. Shareholder returns. That's not something that that really affects me per se. So hold on. What is the dividend per share right now? Dividend per share 174 yen. And then their share price is 174. So a little over 4%. And then you also get like these Kuo cards. What are Kuo cards? Is that like is that a train station card? Prepaid card that can be used for payments at participant stores. Like, it's basically like cash. It's basically like cash, but the beauty of this is that it's not taxable because it's a gift, I think. All right, so it's kind of quirky way of yeah. But then at least as a foreign investor, I get the dividend. I don't get this benefit card, which kind of sucks. Yeah. Oh, and the more shares you own, the higher the dividend. So you are incentivizing people to hold it, which is interesting. Okay, but you're getting over 5% div yield. Yeah. The question is, okay, so now the question is, are they actually going to grow? So this is, say, important management issues. Among the important management issues, value creation through business has been changed to foundation that supports value creation. Okay. Buildings anew, creating customer value. Facility construction business, leveraging strengths. Okay, I'm not really concerned about that. Price, don't know what that means. Diversify risk, coexist with business partners, competitiveness and engagement. establishing a management foundation to support rapid growth. This is just, I don't know, didn't really extract much from that. Okay, so let's see what it means. So leveraging the strengths of our facility construction business in order to protect a society where everyone can live healthily and to preserve the business environment of our company in a sustainable manner, we will utilize our air conditioning and sanitary equipment, technology, and abundant construction expertise, solving environmental and social, that's crap, centered on buildings, creating new customer value, specialization of core business, utilizing of AI and IoT technology, development of new construction methods and construction techniques, business alliances, M&A. M&A is good. Business alliance is good. Having new construction methods and techniques is good. By combining these two, leveraging our strength of careful listening ability to realize customer needs, as well as capital from our overseas bases, we will create new value based on the buildings. I'm still not seeing much here in terms of investing in employee and leader development and creating mechanisms for transferring skills and improving productivity. That is fair. We're also working to increase organizational competitiveness and engagement through measures such as respecting human rights, expanding flexible working styles. Okay, I like the part about transferring skills and improving productivity. So a lot of fluff here. A lot of fluff. Okay, some social stuff. Please, how many minutes? I have 10 minutes left. Okay. Okay, air conditioning, ventilation equipment, water supply drainage, sanitary equipment, electrical installation. Okay. Our features, overseas network. So, America, China, Vietnam, Australia. Wood tech, on control ecosystems, new construction and renovation. So, okay, I would like renovation to go. Do we want renovation to go up? New build, renovation. Which one's more sustainable? None is truly reoccurring though. But it's good that they have half-half. It is diversifying though. Prime contractor, subcontractor. Don't think that matters too much. Government and private. Okay. Office, accommodation, medical, cultural, schools, industrial. Okay, so they have a good diversified portfolio of buildings that they cater to. I just want to see maintenance. What is their maintenance revenue, bro? Is that broken down over here? New construction, innovations, maintenance, repairs. Ooh, okay. Maintenance and repairs is factored into renovations. But I thought new construction and renovations was half-half. Hold on a sec. That doesn't make any sense. Okay, let's see. 4, 3, 3, 4, 1. Carry over construction orders received for the period. Total. Current period completed construction. Carry over. Okay, so they get new orders, so even though the total amount of 56 billion, they're not able to complete that much. They're only completing 22 billion of work, so next period they have 34. So the revenue from new construction is this, and then renovation is this. Okay. So, but then the orders you receive per period. A low carryover, high order. Okay. I see. Now is this growing? So renovation, maintenance, repairs. I wish they would take renovations out of maintenance repairs. I would like to see maintenance repairs by itself. Which is not available here. Maybe. Let's see. No. Is there any commentary? I like how diversified they are. They're not just focused on like one area. They offer services for many building types, which is good. But growing overseas, it's kind of cheap though. It's kind of cheap. I think it's worth. It's probably a B plus. Probably a B plus. Because they are diversified. They're not focused on just like one building type. They do HVAC. They do plumbing, or whatever, for a lot of different types of building types, which is nice. I want to see the division between renovation. But let's see what their future outlook is. As for the outlook for the company, while economic activity is expected to continue on a gradual recovery track, the outlook remains uncertain. Okay, fuck that. In the construction industry, while construction investment is expected to remain strong, the management and business environment is undergoing major changes. Due to rising material and labor costs, a shortage of construction workers, yes, and aging workforce, yes. So a recurring theme is how do they hire more people, ensure that current people stay, and how do they attract talent? The segments are geographical. The group is primarily engaged in facility construction business with the company and oil conditioning ecosystems and other responsible for domestic operations. Let's see here. Not a great overview, if I'm going to be honest. Don't break down the renovation. So it has gone up and then gone down. Oh, renovations and maintenance was once higher. This year exceeded because they got more contracts. Interesting. Why is this one different? Individual order construction amount. What's that? Individual carryover. Oh, order is what is ordered, not exactly completed. Completed is what is actually recognized as revenue. Completed is what is recognized as revenue. So it's good that construction has gone up. This one looks okay. We're gonna fill out the financial statement here. $1904. Nicely on show. See what the price is on Yahoo. $3970. Okay, financial statement, please. Paris. $24 billion market cap. What is the dividend yield? Okay, so they increased the dividend actually. 174, 4.4%. Nice. Okay, no short-term investments. Some long-term investments. Very nice. Short-term borrowings. No long-term debt. Just short-term net assets. Any NCIs here? No. Okay, so NCI is here. Current liabilities. Total liabilities. Okay. So, enterprise value is low, excluding long-term investments is, yeah, almost 14 billion, including long-term investments is, wow, what is this? Exactly 10 bill. Interesting. Wow, what are the chances of that happening? Exactly 10 billion, okay. Put in the most recent results. Margins increase slightly. So okay, we can continue spending time on this. Just want to know what the company is forecasting and what their future valuation will look like. Slight decline in margins. Seems like they're investing in overseas expansion, but then it's not working as well as they had hoped. A little bit of amortization, we'll add that in. Okay. CapEx, see here. 152,279. Oh, big CapEx in 2025. Any intangibles? Yes, there are. Okay. Oh, also a big investment here for that too. I wonder what it says on Koyfin. Okay, let's take a look real quick. What have they been doing historically? So DNA has risen 480, 520, 400. Okay, it's gone up recently. So they are investing in the company. And CapEx was, ooh, big CapEx here. Cash acquisition. So they acquired some company. So they didn't use, oh, they did use cash. That's interesting. Actually, let me take a look. Did they say anything here? Acquisition. Did they point to any of this? This is their last year thing. They should also state what they acquired here, right? They didn't mention acquisition 2024. Don't understand. The acquisition, nope. Acqui. Strange. made a huge acquisition. Acquisition of shares in a subsidiary resulting in a change in the scope of consolidation. But they're not commenting on it. That is annoying. Probably let's look at the so it's not a new capex, it's just consolidating existing subsidiaries. So so recently they've been spending more capex. Because capex previously, okay, there was one period was quite large. So it goes from periods of low capex to periods of high capex. Do their revenues grow though as a result of capex? So it might be a defensive play then, because they spent that capex and now the revenue's gone back up. But then they don't strike me as super asset heavy. Okay, they probably just needed to long-term assets. Okay, they probably underspent on some capex. So this is to stay competitive. Say DNA of 520, 530 on this. 12 times. Given their capex went up, not down, I expect next period's capex to continue to grow. Let's say 570 capex, but they don't need to spend that much. Any analyst coverage, I wonder? None. Okay, up to interpretation. More art than science here. Okay, so EV/EBIT is around 5 times. 12 times PE. Yeah, they want to grow, but then they're struggling to grow. And it's not, I was not convinced that, okay, what exactly is their technology? What did they do that's different? Why do they even need to expand overseas? Maybe there is demand overseas, but like, why though, you know? They do have a lot of cash. I feel like, yeah, they don't utilize it somehow. But then they are doing, what's good is that they are giving pretty high dividend yield, 3.8% dividend on equity. And then they're also giving domestic people who live domestic in Japan also use Kuo cash, prepaid cash cards basically to be shareholders. So it's good for domestic people, better for them, but not that great for foreigners, but still good dividend. I don't know, is this yeah, it's kind of cheap on EV/EBIT basis, and even cheaper if you factor in long-term investments, but not that cheap on PE basis. 10 times over here. Of most recent quarter. The question is, can can they continue the uptrend because they have a lot of orders from construction? Can they maintain this level of construction orders? The QO cards? Yeah. I'll show you real quick. Let's see, DOE. Oh, right here. Pretty sure. So this is what you get. So if you own 300 to 500 shares, you get 8,000 yen. Yeah, I just saw it just now. 500, 900, you get 15,000, and then over 900, you get 30,000. So your yield increases quite a bit if you buy 900 shares. Each share is worth 4,000. So if you own 900 shares, 3,600. Sorry, 36,000. To get 300 bucks. Up to you if you think that's worth it or not. Yeah, but that does add to yield, and this is tax free. This is not taxable, essentially. Yeah. Interesting. This might not even be a B plus. This might just be a B now. I mean, it's cheap. Just PE wise, not that cheap. Div yield. They're doing the right thing though. They know to return the things to shareholders, so corporate governance has improved. As whether they can actually grow. I'm not seeing it yet. So 1904. I give this a B. Yeah, you guys decide if you want to make this a dividend stock or not. But it's only worthwhile if you own 300. Yeah. Okay. Okay, so it's been about 2 hours. I'm gonna take a quick break, and I'll come back and I'll deal with a special request. The special request is from Leonard for 3828. So that's what I'll be covering when I come back. Yes, correct. So I think this is like an automated thing setting where like if anyone puts a link in the chat, they just don't want to prevent spammers, essentially, right? So if you have a link that you want to send me, you could send it to me through Twitter, through my DMs, and I'll happily take a look. Yeah, yeah. I mean, you have me on Twitter. You can DM that to me. And if I think it's worthwhile to share, I can copy that link and share it with everyone in the chat as well. But yeah, for now, I'm going to take a quick break. I'll be back in around, let's say 20 minutes or so. Yeah. It's pretty late where I'm at, but it's all good. Okay, see you guys soon. Okay, I am back. Okay, so going back to our structure. So review, summary, timestamp, and then change the ticker. Okay, so to summarize for those that are just joining us right now, the company we just went through is 1904 Taisei Onsho. Okay, the company does what they do. They engage in the design and construction of air conditioning, water supply and drainage, sanitary, and electrical equipment systems in Japan. So they not only do this in Japan, they do this in the US and also in China. They're trying to expand sales, have not been that successful, a little bit successful, not that successful. And this is what the valuation metrics look like. Excuse me. Market cap of 24 billion, almost 13 billion of cash, 4 billion, almost 4 billion of long-term assets, a little bit of debt. So net cash is around 10 billion. Enterprise value is around 14 billion. If you exclude all long-term investments, including it, it's around 10 billion. Trades for less than 1 times book. They are actively returning the cash to shareholders via dividend. They also are issuing a Kuo card, which is like a prepaid card, I think, that can be used for that can be only given to domestic Japanese shareholders, not foreign investors, sadly. Multiple wise, it's trading at 5 times EBIT, so it's little cheap, but it's not like that cheap. PE wise is 12 times for their next year earnings. The question for this company is, are they able to really truly grow their revenues overseas? And one thing I was looking for, which I wasn't really able to get confirmation on, is how are their reoccurring revenues growing? They don't really have a slide that showcases recurring revenues, because what I would like to see is for them, let's say they installed an HVAC system, right? And then every year they go back, they sign a contract. Every year, every couple of months, they have to go back to perform routine maintenance on the HVAC system, right? And that would be highly reoccurring, and that also be pretty good margins on that type of thing. But they just lump new construction and renovations, repairs, and maintenance into one category. I wish that they had split out the renovation from the maintenance and the repairs part. So that's what I didn't like. So I'm not really getting much conviction on that end. So yeah, this company, if I could see a increasing reoccurring revenue curve, then this would probably elevate to like a B plus. But it's not one of those companies. So because of that, it's just currently a B. So that's a summary. The timestamp is 216. So this was 1904, 216. That's where we ended off. So timestamp. And so right now we're going to go through a special request. Okay, let's see. So Leonard is the one who has requested 3828. So he says the key in assessing MingFi is the management, I feel, whether they're going to distribute cash or be cash destroying. Sorry, I just wanted to post it early since I need to go to the gym now. Cool. Leonard, can you give me a brief breakdown of what you think the investment thesis for this company is, and why you decided to ask for like a special request on this company? Also, why is their revenue going down in Q1 while it seems like hospitality industry is growing if you look at hotel and airline? Okay, so we'll take a look at that. So the special request right now is 3828. It's a HK stock. So MingFi International Holdings. So MingFi International Holding Limited, an investment holding company engaged in the manufacture trading of hospitality supplies. Hospitality supplies, okay, and trading of operating supplies and equipment in Hong Kong, NA, Europe, China, Australia, and Asia Pacific. So what are hospitality supplies? I'm thinking like bed sheets, pillows, pillow covers, maybe some like I wonder if robes are included in that. Hospitality. I'm thinking of the hotels mainly though. It operates in 3 segments: hospitality supplies business, OS&E business, healthcare, hygienic products business. The company offers room and bathing facility products, including body washes, shampoos, conditioners. Okay, so that makes sense. guest room amenity solution, tea boxes, notepads, so like some swag, trash bins, resins. Okay, so they're like a one-stop shop essentially for procuring hospitality supplies. Notepads, trash bags, vanity mirrors, ironing boards, leather goods, guest room appliances, comprising safety boxes, electronic scales, refrigerators, electric kettles, telephones. Also provides lobby supplies, including signage, luggage carts, ashtrays, so everything. So basically everything that you would find in a hotel. Is there anything else? Linens and beddings, yes. Yeah, fabric stuff. Okay. Further is involved in the provision of professional solutions in product design, corporate branding, gifts and premiums, and event management services. The company was founded in 1980 and is headquartered in Tsuen Wan, Hong Kong. So, okay, this is what Leonard has to say. Lots of dividend. Second largest shareholder is David Webb, which compounded at 20% over 20 years. Fernando says, quite popular among relatives, younger people. They sell no brand, white branded products. They are not too cheap, not too expensive, probably have high margins. They keep opening shops around here. I thought of entering at 4,000, but they keep. Sorry, Fernando, which company are you referring to? Sorry, I got a bit sidetracked. I thought you were, okay, so I'm talking about, currently looking at Leonard's stock right now. Also Fernando earlier did DM me the link for, might just quickly tackle that before I forget. So Fernando asked me, where do I learn about how to use stock screeners, right? And which stock screener would I use? He says, is the Minkabu stock screener worth it? So I personally have not used this. Okay, Fernando also mentioned 7453. Okay, maybe I'll touch on that after Leonard's stock. Yeah. Yeah, we'll do Leonard's stock first. Search for stocks, stock price, search for stocks, stock screening. Small cap stocks. Add search criteria so you can do all these little things. Honestly, so I wouldn't say I can test this later. Basically, what you want to look for is to ensure, like, okay, how accurate is their data? Because if their data is not accurate, then it's not going to screen properly, right? So I found that Koyfin is really good with data accuracy. So that's good. Do they have the entire universe of stocks? Like, do they actually have, yeah. So, sure, I can do something real quick. Let's see here. So they have PE, they have PBR, and they don't have EBIT. They have ROE. So it's pretty limited in functionality. Yeah, because if they don't have EV, EBIT, then that's kind of. But sure, we can do adjusted PE. Let's make it 7. Sure. Search for these conditions, and then that's a long ass list, right? So then you'd probably add more conditions. So PE, add search criteria. What? Price of book. Let's do less than 0.7 times. Oh no, 188. 188. So, okay, so the stock price, target price. Interesting that it's a target price. That's helpful. Market cap, minimum investment amount. I don't know what that means. Is that the PE and then the price of book? I don't know what it means by minimum investment amount. That doesn't make much sense. Yeah, but then besides that, like the customizability isn't as great. So for example, like Koyfin for anything that is screen, right? So for example here, I can add extra criteria. I can look at LTM, last 12 month EV/EBIT. I can look at last 12 month PE. I can look at the div yield. I can add other things into columns to really screen better and just customize the screenability. So in terms of the customizations of the screener, Koyfin does a really good job. This one you have to, I mean, it's not bad. Like if you wanted something free, this works. It just works, right? Yeah. So that's my view on that. Okay, continuing on to Leonard stock. So just to recap, it says lots of dividends. So the stock has a lot of dividends. Second largest shareholder is David Webb. So he likes this company. So go back. So okay, just immediately, just first initial thoughts when I view the description of the company. Like all of these goods, there's a couple questions that pop in my head. All these goods are like pretty commodity goods, right? Like stuff that you can find from China, right? Like if management really, like if I'm an owner of if I'm the manager of a hotel, right? Like I know that for me to go to these guys to procure these products, there's two options. One, either I procure them myself, right? And if you're a big hotel chain, you would probably have enough scale to procure this stuff yourself, right? Or you, well, okay, I'm not that knowledgeable of the hotel industry. Let's be real. I'm going to be honest here. I don't know exactly what the industry trends are, right? So for this business model to make sense is they buy so much product, have so much inventory, and then they add a margin where it's like, okay, if you were to buy like, let me give an example, hand soap, right? Let's say you buy every month, you buy 1,000 bars of hand soap. If you were to procure that yourself, you're paying, let's say, 25 cents per bar, right? But then if you go through Ming-Fi, your cost is 23 cents, right? So you actually save money, right, in that scenario, right? Because the only time you save more money than going with Ming-Fi is if you buy, let's say 5,000 bars of soap, right? So then that would knock down your cost to 20 cents per bar. But do you want to stock up inventory on soaps, right? so there's and then because to run a hotel, you have so many different products, right? You have hand soap, you have shampoo, you have conditioner, you have towels, you have bed sheets, all these different types of things. Do you have enough room in your hotel to store all these things, and can you order in an amount that has scale, right? So unless you're a big hotel chain within a certain region, this is probably where Ming-Fi has some type of advantage there, in that they buy more and then they can sell at you at a reasonable markup that you can't get yourself. So that's probably where the business economics lies, if I were to assume. But let's take a look. I assume that their profit margins are pretty low. Okay, this period is actually decent. It's actually higher than I thought it would be, but around the same ballpark. I don't think this is a volume game, not a you know, in 2021, fiscal year 2021 makes sense because whole COVID, right, which impacted hotels. People weren't traveling as much. That makes sense. Revenues resurfaced past COVID levels, pre-COVID levels, so they are growing, which is good. Operating profits. Alright, let's take a look at enterprise value. So, okay. MCAP 660. It's gone up recently. $300, so like 360. minus minority interest. Operating income 170. Okay, pretty cheap. Pretty cheap. Like around 2 times right now. What's our historicals looking at? Really low as well. Pretty low, low margin business. What's their PE looking like? So this would also trade. Is it only Hong Kong? Do they only do Hong Kong? Oh, Hong Kong, NA, North America. Okay, so everywhere. Interesting. I'm curious how they're even able to maintain like a competitive advantage. You know, like I wonder if there's anything like, oh, I have a company, like I have a hotel in Canada and I can't, or the US, and based off of our, you know, certain factors, like we cannot purchase from a Chinese company for that procures hospitality supplies, and they have to go through Hong Kong. I wonder. Because I'm just not understanding why someone would go with them, and that's like some just Chinese firm, right? Like literally all this stuff is made in China. And then they ship it out, yeah. Ship it out to other places. The 11% dividend yield looks attractive, sure. This is more like a defensive stock. This is like a dividend income play, essentially, right? So revenues are increasing, and as a result, offering income is increasing, and as a result, valuation is dropping. Enterprise value, but then the thing is, it's never traded that high historically either. Let's see. Let's look at the share price. Okay, so it has traded as much as 120. What has their dividend historically been? Oh, 11%, really high. So maybe they increased their dividend recently. They stopped giving dividends, resumed dividends, gradually increased it to probably pump up the share price. Probably. 7 cents per share. Wow. So 3 and 7 cents, 2 and 5 cents. So it used to be 7 cents, now they're sharing, doing 10 cents per share. Oh, they have a factory in Shenzhen, so they are, okay. They actually manufacture this stuff. My understanding is that they produce it and sell it, and they have an existing relationship with all these hotels. This is definitely a volume business. This is I buy in bulk, so I have a price advantage, and I charge a margin above that bulk. So they are like basically a wholesaler essentially, and a middleman, essentially. Yeah. Having some products that they bulk manufacture would give them some edge in some regards. Be like, oh, if you buy sometimes it's even this, right? Like sometimes it's even, oh, if you buy these items from me, we'll give you these products as free swag. All right, and building relations that way sometimes. Okay, I'll take a look at the company's IR. Error establishing your database connection. What the hell? Mingfi group. Okay, let's take a look at the products. I like looking at this type of stuff. Okay, room and bathing facilities, guest room amenities, lobby supplies, guest room appliances, cleaning supplies, outdoor furniture, linen, ceramics. Also, literally a little bit of everything. Let me just take a look at. Let's see, what are we looking at? What metrics are we looking at here? Millions. So 2.3 billion HKD. 2.3 billion HKD. What is USD to HKD right now? Let's say 8 times 1.785. It's like 400 million. Okay. English investor relations. Where are their financial results? Final dividend. Is their dividend sustainable? Is that a special dividend? That's also something to look at as well. Okay, so 3828. Also, sorry, Fernando. After this company, I might not have time for 7453. After this Hong Kong company, I'll have to look at your 7454 for next time. Yeah, I only have time for just one more today. Let's see here. C82. HKD. No, it's HKD. HKD. 90 cents per share. 90 cents per share. He proposed final dividend in respect of the fiscal year, December 31st, 2024 of 7 cents HKD of the company was recommended together with the interim dividend of 3 cents per share. It was declared representing a total dividend of 10 cents per share. Okay. Weighted average number of ordinary shares, 723,839. 723. That's it. Pay cash, let's see here. So these are in thousands of HKD. So that's 328 million. Market cap is 650 right now. Pledged bank deposits, so we have that. Trade and bills receivable, amount due from associated company. Other financial assets at amortized costs. Do I want to include that? I think it's fine. Investment properties. Investment in joint ventures, investment in associated companies, intangible assets, investment properties. I mean, I guess I could. Short-term debt. 1.844, very low debt. Oops, that's not current, that's long term. Okay, sorry. Current liabilities is 4253. How do they account for rent in their income statement? Hey Leonard, just a sanity check. Do you know how Hong Kong companies account for rent in their income statement? Do they expense it in like, where do they expense it? Do they expense it in the income statement, or do they amortize it or depreciate it in the cash flow? Curious if you know. That would determine if I include lease liabilities in the enterprise values calculation. Not a big deal because it's so small anyway, so it's not that big of a deal, honestly. Not really. Sorry, so what do you mean? Is it in the income statement or is it not in the income statement? I'll just quickly ask Grok that question, actually. Okay, it says yes. Grok says yes. Rent expenses included in income statement for Hong Kong publicly traded companies, typically under operating expenses as a part of administrative expenses or other operating expenses, that depending on the nature of the rental cost. Operating leases, rent expenses recorded as a lease expense over the lease term, while finance leases may involve depreciation and interest expenses. The specific presentation may vary depending on company accounting policies and type of lease. Okay, that's fine. Oh, you mean you don't know? Okay, that's okay. I just asked Crop. I'll just, yeah. Okay, so equity, total equity, this 1263.87, 0.5 times book. They have quite a bit of non-controlling interest though. 60.026, 4.75%. I just realized that this on the left side, I'm just gonna double check all my numbers to make sure I took the numbers from the left side and not anything from the right side, just in case. I don't think I did. I don't think I did, but just in case I did. Just in case I did a little switcheroo there. No, I think we're good. Yeah, we're good. Yep. Okay, dividend. 10 cents in total. I'm gonna take a look into that real quick because they can the fuck? 7 cents? Cents? Oh, 7.0 cents. Hello, Luke. Welcome. We're doing a Hong Kong stock right now. I don't know about if you can invest in Hong Kong, but if you can, this would be interesting. The proposed final dividend is subject to approval at the annual AGM to be held. Okay. The board recommend the payment of a final dividend of 7 cents per share. I wonder how much invested interest the board has in terms of stocks. Because if the board has a lot of shares, then they're incentivized to probably continue paying a pretty big dividend, right? Over time. So, okay, let's take a look at shareholder. Key shareholder value indices. What does that mean? 85. What's a better word? Ownership. Probably a better word. Ah, okay, there we go. Wait, this is principal subsidiaries. Probably not related. Principal subsidiaries, no. Major shareholders, maybe? Major share. Is there Koyfin functions for this, actually? That I'm actually not too sure about. Let's see. Snapshot. Ownership. That's fine. Board of directors. Okay, we're gonna do Ching Chi Fai. Chairman. Investment Committee, Ching Chi Fai. 63. How many shares do you own, brother? 30 years of experience. Wait, is that Ching Chi Fai's brother? Okay, so the little bro is the executive director. Son of Ching Chi Fai, 43. Okay. Ah, this is what I want to see. Okay, so let's see. Personal interests. Corporate interests. So, wow, he owns 30%. 30% is showing a 10-cent dividend yield. And his little bro owns 5%. The CEO had a son with 20 years old. Yeah, the son's 43. He's 63, right? Yeah. Nothing wrong with that. Nothing wrong with that. So probably very hard for this company to get bought out because him and his brother own 35%. And Ching Chun Y is probably his son, I think. Ching Shi Y is his son. Let's go back real quick. Ching Shi Y was the son. Ching Chun Y. Is that Zhang? Is that Zhang? Zhang Xunhua. Sorry, my Mandarin isn't the best. Some like harder words I don't know. Zhang Zi fight, I think that's and then Zhang Zi cut. I think it's yeah. So this is Canto spelling. I think it was Mandarin spelling is ZHENG. I think if I got that correctly. Let me just double check. The fuck?
The fuck?
No. That's something, yeah. Leonard, did I pronounce it correctly? I don't know if you're Canto or not. Makes around 3 million a year, just under 3 million a year, and then these guys make divided by 8, just under 400K. So the son doesn't actually own it; he owns like 0.6%. Not a lot. So if someone wants to take over this company, it's gonna be rather difficult to take over. Dividend is tax-free in Hong Kong. Oh right, Hong Kong, the tax rate is like 15%. Doesn't matter how much you make, it's 15%, something like that, right? Dividends are tax-free in Hong Kong. That's OP. That's OP as fuck. Damn. Wow, okay. I have to set up a company in Hong Kong in the future. You know, if I want to live off dividends in the future, I just move to Hong Kong then. Jeez. Fuck. Let's see. Okay, if that's the case, then they're very incentivized to keep the dividend up, bro. So I think your dividend is pretty safe. It's pretty safe. Yeah. Where's the balance sheet? Come on, give me to the balance sheet, please. Okay, there we go. Intangible assets. So little. Like barely anything. Total assets 1995. 125. Hey, Luke, if you're still in the chat, what is the tax rate for dividends in Japan? How do they tax dividends in Japan? In Canada, dividends is fully taxable at the rate of your marginal tax rate. So it's only capital gains that you get like 50% tax on. Like 50% of your capital gains get taxed if it's long-term investment. But if it's short-term investment, then it doesn't fall under that camp. What is this? I entered that wrong for sure. Okay. So let's see, how do we want to do this? 2024. 7.5%. That's pretty good. Plus what's in here? Okay, cross profit. Over 20%. Other income, distribution costs, administration costs. Impairment losses. These are fair. Finance income, finance costs. Just ignore this. I'm using a J-gap structure with ordinary profit when there's none of that in Hong Kong. So just ignore that, but that's okay. 2023. Oops. Let's just change that real quick. 67273. 7%. Increase recently. Very curious how they're able to do that. Ooh, what's corporate tax rate in Hong Kong? See, this looks like 20%. This looks like a lot more than that. 28, 40, holy shit, 42. This is over 30%. And yet this one is like just over 20. What is going on here? What is Hong Kong's corporate tax rate for publicly traded companies typically? You know what, I can look at Koyfin for this. Should show that. And should have some tax rate here. Effective tax rate, okay, 22%, 33, 22, 26, 27. Oh, probably because they sell stuff in other countries as well, so it's like a blended tax rate. Whereas in Hong Kong, it's kind of low. Yeah. Tax rate is 16.5% on assessable profits exceeding 2 million HKD. On the first 2 million assessable profits, 8.25%. Wow. Uniformly applied to both publicly traded and private companies. Wow. What should I read, Leonard? What am I reading? Are you sending something to me? Okay, so it's not gonna be that high. I think it's a blended tax rate. Let's just say 24% here. We do know that in this period it was 21, let's say 22 and 33. Sorry. 33, 22. Okay. Cash flow. The group will continue to explore new business opportunities, shareholders of the company, and potential investors should accordingly exercise caution. Sounds like the stock is going to tank. Let me search that up. Where did you see this? Okay, exercise caution is probably enough of a search term. Yeah, where did you read that? Did you you send it? Did you DM that to me? Because links sent in their chat don't show themselves. By the way. Yeah. You can DM me that link if you would like. Okay, let's take a look at cash flow. Cash from operation. Okay, 161647. Okay, so you have to open a completely separate portion of the document in order to get at it. Okay, so let's see. Property, right of use assets, and intangibles. So I have to add all three to get to the right number. So 52.541 plus 8.684 plus 0.63. Alright. 59.215 plus 8.728 plus 0.651. Okay, so you send me a DM. Okay, so voluntary announcement, business update, and financial highlights. So when was this? There's no date on this. Awesome. Maybe he shows it later. Okay, so the unaudited revenue and gross profit group for the 3 months ended blah 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 were approximately this and this. Gross profit margin declined. Hospitality services 3 months. 23%, 23%, 30.8. Healthcare and hygienic products. Okay. The decrease in revenue of the hospitality business, supplies business during the 3 months was compared to was mainly due to decreased demand of hospitality supplies, products in travel, tourism, and aviation industries. Okay. Cash increased. Okay, impact of tariffs on business operations. Okay, in April 2025, the United States government announced a new round of tariff measures affecting a broad range of imported goods to the U.S., which has aroused widespread concern. The U.S. tariff policies are still evolving and subject to rapid and frequent adjustments. The group is persistently evaluating the extent of impact on our business. The revenue from the North America account for 20.6% of revenues. The board of directors will continue to assess the group's financial performance, closely track the U.S. tariffs trend, and respond proactively by adjusting our strategies as necessary to mitigate the potential risks and monitor the group's exposure to the global economic and geopolitical risks and uncertainties. In the meantime, the group will continue to explore new business opportunities by capitalizing on our strength with necessary management measures. Shares of the company and potential should accordingly exercise caution in dealing. I mean, this sounds like just like any doc. This just sounds like any. Doesn't really mean much, honestly. I think this is just a general statement, like saying, "Hey, we have this thing," and when was this document created? Like, this is like a nothing burger as well. This is like, we'll just explore other business opportunities. Like we're saying, hey, our revenues are likely going to decline. But the question is, who do they replace it with, right? If they're not going with this Hong Kong manufacturer because they have tariffs, okay, what are even Hong Kong tariffs in the U.S.? That's question number one. And then let me see if Grok can answer that question. What is USD tariffs on Hong Kong? Didn't know the answer to that question. Right, and then if they can't find a supplier that is you know, more cost effective, because they're not gonna, let's be real, the US is not gonna start making hand soap and all that kind of crap that their hotels need. They're still gonna source it from other places. As of May, okay, the U.S. tariffs on imports from Hong Kong are currently applied as if Hong Kong were part of mainland China, following the U.S. decision to treat Hong Kong as a non-separate trading entity after China's 2020. Ooh. General tariffs on Hong Kong imports. As of May 14, 2025, goods from Hong Kong are subject to an additional 30% ad valorem tariff, which includes a 10% reciprocal tariff under Executive Order 14257, and an additional 20% tariff related to the U.S. fentanyl crisis. The fuck? De minimis exemption. The de minimis exemption, which previously allowed duty-free imports for goods valued at 800 or less, was eliminated for Hong Kong and China starting May 2nd, 2025. Low-value shipments now face tariffs, with rates for small parcels reduced to 54% as of May 14th, or a per postal item fee of 100. Steel and aluminum tariffs, Section 301 tariffs. Additional tariffs of up to 25% may apply to specific Hong Kong goods under Section 301 actions targeting China, particularly for intellectual property concerns. That does not apply here. Exclusion. Certain goods are exempt, including humanitarian aid, informational materials, and goods in transit before February 1st. I see. So then the way to look at this is what exactly is the profitability in that U.S. region, right? So it's 30% tariff, right? Yeah, then the question is, how much of that can they pass that on to their buyers? And then if not, let's say it goes to zero, what's the company's profitability if it goes to zero? Right? I think their profitability structure remains intact, right? You know what? You would look at inventory turnover real quick. So let's take a look at inventory turnover, because that would show us how much inventory they would own. Because it just means, okay, if no one's buying from them from the U.S., then they just stop ordering, right? So what is their inventory turnover? Like, what is their? Do we have that information here? Do we have that information? So it's probably in the balance sheet. Do we have that? Okay, well, we can see here. Say 350. It's 350 on 2.37 236, 6.5. So roughly 6.5 times a year. So they're not stocking that much inventory. So essentially what happens is, okay, let's say 20% of this revenue drops, right? So that you drop by 4.6 on the, so you drop to around 1.9. 1.9, and then let's see, how stable has their gross margins been? Pretty damn freaking stable. Okay, so let's assume, so the margins have actually improved quite a bit, actually. 6.8. 6.8. So 1.9, 6.8, what is that? So this is the absolutely worst scenario, right? And then you have, let's say, 1.9, 6.8, 6.8%. Right, we'll assume that It's red here. There's some finance income for no difference. Let's call it the same, whatever. And yeah, let's take a look at CapEx real quick. Document is released on May 20th, 2025. Can I even buy this share? 3828. I think it might be, I might not even be able to personally buy this. Might be something that you could buy. Yeah, I'm not allowed to buy this, personally. So it's kind of, I'm just doing this for you, Leonard. Okay, let's see here. Yeah, if you make money off this, make sure to treat me to yamcha. Just kidding, just kidding. Let's see. Cap X. What the fuck? Oh, this is probably just, okay. Do we have any coverage here? Do we have any analyst coverage? No, we do not. So sad. Let's take a look at historical cash flow real quick. Okay, this document is May 20th, 2025. So basically, what it's saying, all that says is factor in the disruption in sales in the US segment. That's all it means. That's all that means. Right? But then if we look at the recent share price, like, well, if that came out in May already, right? Like, it's like 1 year. Okay, like May it came out. So, I mean, April rebounded May 20th. Okay, and then it drops to 80 cents, and it's already rebounded, so it's already been factored in. It's already been factored in. So, yeah, it's already been factored in. And this is already extraordinarily cheap, right? Even 6.6 times, let's say 2.6 times EV/EBIT, like this is fine, right? EPS of 14 cents, they can still pay. Okay, potentially they have to lower dividend, right? Potentially they don't give, because when it was 19 cents per share, sure, giving you 50% is fine, but the next year you might be looking at like a 7%, 7 cents on 90 cents, right? So you have to ask yourself, are you okay unless there's a policy? If we know there's a policy, do we know there's a policy? 8%, so you drop to 8% div yield. Are you happy with an 8% div yield, 2.6 times EV/EBIT and a 6.6 times PE? That's the question you have to ask yourself, essentially, right? Oh, this is not done yet. This is, let me see. Crap, I was gonna do cash flow. Give me 1 second. Dividend. Okay, pretty safe. Say 68, it's okay. CapEx. CapEx. Consistently gone up. Well, LTM has gone up. Doesn't have to be that high. CapEx. Oh, okay, it was high once. Okay, 200, 290, 200, 300, 240, 270, 320, 4. 1, 2, 3, 4 and 7. Around 60 something on average. 665. That doesn't really matter. Let's say 0.7. Are they asset light? Very bad acquisitions. Yeah, so they should. Okay, what's their DOE? What's their dividend policy right now? Dividend. Fuck. Policy. Do they have a policy for this type of shit? Oh, nice. The board intends to strike a balance between maintaining sufficient capital to grow the business and rewarding shareholders. Declaration and payment of any dividends, but the company will be subject to the board's decision in any final dividend for a financial year of the company and will be subject to the shareholders' approval. The decision to declare or to pay any dividend and the amount of any dividends will depend on the group's earnings, financial condition. I mean, we have the historical payout ratio. We can take a look at that right now. Payout ratio has been 40%, 50% max. Yeah, so you're looking at max 50%, and if that's the case, yeah, 40%. So it's off of 0.2, yeah. Normalized EPS, basic EPS. Fact rate, probably not asset light. Their capex doesn't seem that extreme. I don't think they produce everything themselves. Pretty sure that's not the case. Pretty sure that's not the case. And look at capex relative to earnings. Let me think about this. Net income 140, capex 170. You're paying half of that. DNA 60, so we're just replacing. EBITDA 240. Spending around a third, just under a third. Yeah, just under a third on capex. So free cash flow is still decent. 100, 129, 100. So say they make 100, right? 100 on free cash flow. So price of free cash flow would be around 6.6 times. That's okay. Yeah, I wouldn't expect their. I wouldn't expect their dividend. Okay, if we assume US really goes to zero, I don't think so. But let's say it does go to zero. In the worst case scenario, you get a 7%. You know, maybe 6%. So I would expect potentially dividend to go down. Well, actually, how much cash? They have a lot of cash. A boatload of cash. So you see, the thing about family businesses is that they own 40-something% of all shares, right? They're just gonna milk that. They probably have a very nice lifestyle, right? Like fucking the what the fuck? Ching Chi Fi, okay. Ching Chi Fi guy, dude, owns like yeah, being a company founder. He's also the founder of the group. Sales, marketing, production. This is his baby. He's in retirement age. He's fucking 63. What are the inheritance laws in Japan? I mean, sorry, not in Japan. In Hong Kong. Wait, if he owns this many shares, right? You just times that by 0.9. That's 200 mil. You know, 200 mil, 200 HKD divided by 8. Just, well, no, under 30 for sure, but like, oh, 25 mil. So he owns 25 mil. Oh, okay, so he's not 25 mil. 25 mil worth of stock. USD worth of stock. What's his compensation? What is his compensation? I'm actually curious about that. What are their compensation structures like? Wait, This stock is worth 600 divided by 8. 80 million. He owns 25 million. Oh, okay, that makes sense. That makes sense. What is the compensation? Key management compensation. Yes, please. What the fuck is this? You're not gonna break that down, buddy? What the fuck? Okay, let's see. 11.243. Do you have a breakdown here, buddy? No. Yeah, so instead of paying them compensation, they pay themselves a dividend, right? So if that guy owns 25 mil, right? If he pays himself a 10-cent dividend yield, then he makes 2.5 mil that year. That's fucking awesome, right? That's insanely good, right? So, yeah. So he owns enough stock to just pay himself 2.5 mil. So yeah, you're right. You're right. Compensation is shit, increased dividend, but their recent dividend policy is below 50%. They don't want to juice it too much, probably. Yeah, and it wouldn't make sense if they're say EPS goes to 14 cents and they maintain it 10 cents. I mean, it could make sense because they have the cash for it. They have the cash. So if they did want to do 10 cents and increase it beyond their own payout policy, payout ratio. Do they have one payout? Do they have something like that? Is there commentary? No, no commentary. Okay. Is there any outlook? Any outlook? Outlook. Excellent international corporate brand specializing. Okay. Shut the fuck up. Okay. No, well, that's it. That's it. So, okay. Close recap. Okay, 90 cents per share. Okay. What do you think is a good share price to get in at? Probably 70 cents to 80 cents. You know, then you would get somewhere between a 9 to 10% div yield, right? Even if it drops to 7 cents, right? I don't expect it to drop all the way down to 1900, right? But if US ceases to exist, it's not too bad. If US ceases to exist, this is what it trades at, 14 cents per share. So then you have to think about, okay, what is a potential good PE for that, right? So is it going to go back to its former LTM PE of 4.7 times? If that's the case, 64 cents, right? If that's what people are willing to pay, 5 times PE for that, so that's like 70 cents, let's just say, you know, 70 cents roughly. Right, 70 cents, get 7 cents dividend. Yeah, so it could re-rate to something like that. So if people are very hell-bent on getting 10% div yield, then, you know, 70 cents is what it's going to be like, right? If you say that management, hey, we have a lot of fucking cash, the father and son, the father specifically, wants to continue getting that 2.5 milli USD every year, then they're going to, you know, say, you know, fuck the 3 cents difference, right? What is 3 cents difference on this many shares, right? 3 cents. 22 million H80, right, on their 329 cash pool. That's fine, right? That's fine. The issue is they have so much cash that they don't know what to do with it. Yes, no, I can see that. Well, literally, they're just selling what? How do they expand? So this is like, we have people we have connections with, and we've established those connections over time, and we're just gonna milk this company. The father owns a third of the, like 30% of the shares, so it's like, okay, we're gonna extract as much of this as possible. And okay, if we want to really go by the Charlie Munger phrase of show me the incentives and it will show the result, then this is gonna stay. If we think they're gonna take a more shareholder-friendly approach and adjust it based off their historical dividend payout ratio, then this might be what's happening. And this is in the worst case scenario if the USD really just drops all the way. The US goes to 0. I doubt that's going to happen, right? So it's probably anywhere in the vicinity of 8 or 9 cents. So then the share price could be, and it can drop to like 80 cents, 90 cents, 70 cents, yeah. But it's cheap. It's cheap, but you're right. What are you going to do with all this cash? Right, but it is 5 times. So if you want to wait until it gets to 70 cents. That's my advice. You know, not investment advice. Sorry, that's what I would personally do. Sorry, this is not investment advice. Nothing I say is investment advice. Sorry, I do not own shares in this stock. I can't. My interactive brokers will not allow me. So yeah, that's okay. So in summary, cheap stock, right? But it's reached its all-time recent highs. That's something to be aware of. They have a lot of cash. According to Leonard, bad at acquisitions or expanding business. So you're just really milking the current business. How are we returning cash to shareholders? Elevated dividend yield, 11%. Every year, spend 10 cents. But then their EPS is 14 cents, so they're going to keep hoarding the cash. So in that scenario, because they're still going to be hoarding, the amount of cash coming in and the amount that they're spelling out is still larger. So the cash balance will grow. So they should, they should do some. Should they do buybacks? What's their? Oh, they're 0.5 price to book. So they should do some buybacks. Do they say anything about buybacks? Buy back, repurchase. What? Cash flow. Fuck. Cash flow. Let me just quickly look at that real quick. Okay. Finance activities. No, I don't see. Koyfin would also point it out too, actually. Repurchase of shares. Barely, if ever, done. No, they just don't do it. Okay, annual. Let's really quickly look at annual. No, if this is accurate, they barely do it, so ignore that. Yeah, it's just buy low. The no loss scenario is 70 cents. So that's my. So if it drops to 70 cents somehow, then easy gain. It's not gonna drop to 70 cents. I don't think so. Nah, it's not going to. There is risk that if they do tune down shares to that they do reduce dividend yield to 7 cents, then this stock might tank. But yeah, I'll leave the decision to you. Okay, so that ends pretty much today's stream, and yeah, so this timestamp will go to 3:26. Yeah, so brief recap. This would be, I don't know, hotel industry, diversified across countries, so I think that's fine. I didn't really look at exactly the demographic, the geographical mix. If the geographical mix is good, then that would be more defensive. Hopefully not too concentrated. High dividend, good. Hoarding cash, not good. Multiples, cheap, good. Do I expect them to grow revenues? Not really. Because of China competition. Tariffs could drop the revenue of US significantly, right? So in a very significant scenario, then you basically drop to around 1.9 billion HKD, which would result in an EPS of 14 cents. Yeah, so trade at 6.6 times PE. Still cheap. Valuation multiple still cheap. Yeah. But then how cheap is this relative to other opportunities in Hong Kong? That I don't know. That part I do not know. So, yeah. I would put this in, this doesn't really belong in a tier list, right? But if I were to create a tier list for that, it wouldn't be an A investment. It would be probably in a B, right? Because you're just collecting dividends. You just want to buy it to collect dividends, which is fair, right? Because what's going to happen for this one is, like, because they're paying less than their actual EPS, next year's, it's still going to be the same scenario. It's going to be the same setup. They're going to have even more cash in that scenario, right? And it's going to look even more cheap on a price, from that perspective. Their book value is going to continue to go up, and then price of book's going to stay low. I hope they buy back shares. They're not going to do that. I don't know if that's a Hong Kong companies really do that, but yeah, if you can purchase in Hong Kong, this one is okay. It's not bad. I don't see yourself losing too much money. 3 years? Yeah, 60 cents would have been really cheap. Yeah. Okay, well, that's that. I'm gonna put that in. So we went over times that 3828. That ended at 328. So that's basically end of the stream. Essentially, that's when I did a recap. So those are the two main stocks for today. Yep. Thank you everybody for tuning in. Hope you guys. Oh, we have 4 concurrent viewers, 5. So this was engaging for quite a few of you. Nice. So yeah, thanks everyone for contributing, engaging in chat. I will continue this live stream challenge because I need to get to freaking 10 of these. Holy fuck! I only found 3. Kind of found 3 so far, so I need to find. Hopefully I find a few S's and a few more A's. But I need to get to 10. It's gonna be tough. I don't know how I'm gonna do that, but I'm gonna have to do more live streams. So look forward to future live streams. Thanks for tuning in, Fernando. Thanks for tuning in, Leonard. Thanks for tuning in, Luke. Who else was in here? Just going through, mainly E3. Yeah, thanks you guys for tuning in. Really appreciate the support. And yeah, look at better sectors next time, for sure. Yeah, I was speed running through construction. This is only like some of them. Like I went through way more than that. So yeah, which page did I get to today? 162. So we made good progress. So we minus 30 pages today. So that's pretty good. That's pretty good. So I'm happy with that. So we'll start off 162 next time. So yeah, good night everybody. Good morning wherever you are, and yeah, take care. See you guys in the next stream.